India's banks reported far fewer frauds last year. According to the RBI, the number of fraud cases fell from 35,800 in FY24 to just 10,114 in FY26, a drop of nearly 72%. That sounds like good news, but there's a catch. Even as fraud cases fell sharply, the amount involved surged to 48,000 crore rupees, the highest in 3 years. So if frauds are becoming rarer, why are banks losing more money than ever? India's banking fraud problem is changing shape. Not more frauds, but bigger frauds. And increasingly, those frauds are linked to loans. According to the Reserve Bank of India's latest annual report, frauds worth 48,000 crore rupees were reported in FY26. That's up 46.4% from 32,803 crore rupees in FY25 and more than 4 times the 11,013 crore rupees reported in FY24. But there is one important caveat. The RBI says FY26 includes 314 fraud cases worth 30,199 crore rupees that actually relate to previous financial years. These were reported after banks re-examined cases to comply with a Supreme Court judgment from March 2023. Even after accounting for that, the broader trend remains clear. For years, digital payment frauds dominated the headlines, but not anymore. In FY26, advances or loans accounted for 85.5% of the total fraud amount reported by banks. Frauds linked to advances touched 40,774 crore rupees, up from 30,367 crore rupees in FY25 and 8,917 crore rupees in FY24. The number of loan-related fraud cases also rose sharply, from 4,105 in FY24 to 7,924 in FY25 and 8,640 in FY26. In value terms, this is where the problem now sits. Public sector banks accounted for the largest share of losses. Frauds worth 35,709 crore rupees were reported by state-owned lenders in FY26, compared with 23,617 crore rupees a year earlier and 8,092 crore rupees in FY24. That means nearly 3/4 or 74.5% of all fraud amounts came from public sector banks. Private banks reported frauds worth 11,399 crore rupees, up from 8,927 crore rupees in FY25 and 2,667 crore rupees in FY24. Interestingly, private banks accounted for a much larger share of cases than of losses, suggesting that the biggest value frauds remain concentrated elsewhere. Perhaps the most striking change is in digital frauds. Digital payment frauds have collapsed. Cases fell from 28,836 in FY24 to 13,332 in FY25 and just 293 in FY26. The amount involved dropped from 1,452 crore in FY24 to 517 crore in FY25 and only 29 crore rupees in FY26. Their share of total fraud cases has fallen from 80.4% to just 2.9% in 2 years. Meanwhile, deposit-related frauds stood at 377 crore rupees in FY26, while the others category jumped to 6,063 crore rupees from 971 crore rupees a year earlier. So the story is not that India's banks are facing more fraud. It's that the nature of fraud is changing. Thousands of small digital frauds are no longer driving the numbers. Instead, a smaller number of high-value loan frauds are causing much larger losses. Fraud cases may be falling, but when they happen, the financial damage is becoming far more expensive. Follow Business Standard for more such stories.